Hi, this is Drew with Daniels Ag Services with your Post-WASDE Wilkins Ag Wire Wrap. Markets finished up mixed. You had corn and wheat lower and beans higher on the day. So let's grab the whiteboard and try and make a little sense on why that happened. So get up in here close, that way you can see what we've got on the board here. We're going to start out with U.S. 2013-2014 ending stocks. And this is the estimate, the first column. The actual, as it says, is what we actually got from the USDA today. So we came in actually much lower than what the trade was expecting on 2013-2014 corn ending stocks. Came in at 1.146 billion bushels versus the trade estimate of 1.314. Same with beans, much lower than the trade had expected as well. Came in at 130 million bushels versus the trade estimate of 134 million bushels. And then beans, not just a huge difference, did come in a little lower, 583 million bushels versus 590 million bushels at the estimate. So we don't have any estimates to go over as far as the 2014-2015 ending stocks, but we did have some estimates. And what I did here is, if it's in red, it means that the market saw it as bearish, and if it's in black, then it's kind of neutral. So as you can see here, U.S. ending stocks was seen as bearish for both corn and beans as far as new crop goes. Ending stocks came in above the trade expectations at 1.726 billion bushels for corn and at 330 million bushels for beans. Not too off what the trade was expecting at 540 million bushels for wheat. So U.S. ending stocks for new crop was seen as bearish for corn and beans. Not a whole lot deviation from what the trade average estimate was for the wheat, though. Now we get into the 13-14 global numbers here. Corn expected to come in at 157.31 million metric tons, much higher above that, a little over 11 million metric tons higher as far as corn goes. Came in at 168.42 million metric tons. So that was a big difference than what the trade was expecting. Wheat actually came in lower with the trade, or I'm sorry, not wheat. Soybeans came in lower than what the trade was expecting. It came in at 66.98 million metric tons versus the average trade estimate of 99.77 million metric tons. And then wheat came in a little higher than what the trade was expecting at 186.53 million metric tons versus the estimate over here at 185.95 million metric tons. So as we take a look at the global 2014-2015 ending stocks estimates, much like we had over here on the U.S. ending stock estimates, bearish for both corn and soybeans. Again, missed the boat big time here, much like it did over here on the actual global stocks for 2013-2014. Same thing with 2014-2015. Came in at 181.73, so well above what the trade was expecting. Beans came in at 82.23 million metric tons, and then wheat not too far off from what the trade was expecting at 187.42 million metric tons. So it's a lot of numbers we just went over there. Again, if you look at the bottom of the Wilkins Ag Wire email, you'll see the full table with all the data there. That way you can look at it, see what the range of estimates were, the average estimates, and it might make a little more sense to you. But essentially, when you take a look at those 2013-2014 ending crop numbers for the U.S., you're thinking, why were we not higher in corn? Well, those world numbers were just so far off, and we had so much world supply that it overrode it, at least for today, and we finished lower on the corn side. You can say the same thing for wheat. We were a little lower than expected on wheat, but world supply is really big right now. And then moving over to beans, the one market is higher. Not too hard to see why that was. You're coming in at 130 million bushels as far as your carryout, about the tightest ending stocks to usage ratio we've ever had. So definitely easy to see why beans were higher. Didn't take new crop with it as much, though. New crop was up a little over 2 cents, I think, and that was being drug higher by old crop. But when you look at the upcoming crop that's expected to come down the pipe, 330 million bushels ending stocks for 2014-2015, plus a larger world estimate, could see November get a little pressured due to that. That's why we didn't see it run like we did with old crop today. So that's your Post-WASDE Wilkins Ag Wire recap, and that sends us off into the weekend. So have a great weekend, and we'll see you on Monday.
This material is conveyed as a solicitation for entering into a derivatives transaction. This material has been prepared by a Daniels Ag Services broker who provides research, market commentary, and trade recommendations as part of his or her solicitation for accounts and solicitation for trades. Daniels Ag Services, its principals, brokers, and employees may trade in derivatives for their own accounts or for the accounts of others. Due to various factors, such as risk tolerance, margin requirements, trading objectives, short-term versus long-term strategies, technical versus fundamental market analysis, and other factors, such trading may result in the initiation or liquidation of positions that are different from or contrary to the opinions and recommendations contained therein. Past performance is not necessarily indicative of future performance. The risk of loss in trading futures contracts or commodity options can be substantial, and therefore, investors should understand the risks involved in taking leveraged positions and must assume responsibility for the risks associated with such investments and for their results. You should carefully consider whether such trading is suitable for you in light of your circumstances and financial resources. You should read the risk disclosure accessed at www.danielsagservices.com. Daniels Ag Services is not affiliated with, nor does it endorse any trading system, newsletter, or similar service. Daniels Ag Services does not guarantee or verify any performance claims made by such systems or services.